Hi, I'm Wayne Blanchard of the Money Professionals, and I'm back for our wrap-up of the series we've been doing on what's happening with our economy, what are the markets going to do, what should you be doing to protect your money. We've had some tremendous changes since the first of the year, and with what's been going on over the last couple of years, what is it going to do into the future? We've covered a lot of ground in terms of what's happening. And today we're going to say, okay, these are our thoughts on what kind of investing you ought to be doing over the next 2 to 10 years. That's kind of our time horizon. Make sure you understand we are not making specific investment recommendations to anyone. Basically we're saying these are what we think we're going to go. We are investment advisors. If you need some advice, you can come and sit down with us. We'd be happy to develop something that is specific to you. This is not meant to be specific investment advice to anyone. So let's kick it off and go right through them because we don't have much time. First of all, how about cash? Well, interest rates are going to stay pretty low for quite a while. I don't think the Fed's not going to be raising rates, so money market rates are going to stay down very low. What you can do if you want to increase your yield is start looking at some short duration things, say from 6 months to 18 months. Yield will be significantly higher, but you will not get the guaranteed $1 share value. But you should have a lot of stability, but you have a little bit of fluctuation. And if you can stand that, look out 6 months to 18 months and you'll get a much better yield. Now, make sure that you understand you still have to keep money in your money market or your savings account, whatever it is, to keep that $1 share value. How about the bond market? Well, the bond market is going to be consolidated into pretty much just investment quality bonds. The bond market, one of the big things to remember, bonds and stocks over the next 10 years or so, we think that the bond and the stock market, there's not going to be that much difference in the return overall. The equity premium, so to speak, is not going to be there because the markets are going to churn around. So look at bonds, but right now we favor the short end of the yield curve. So look at the short end. You can use good bonds, maybe get a little less volatility. Some good ways to earn some money. But again, stay short because later on we could be looking at a period of time where inflation takes off. But you got probably a couple of years anyway before you have to worry about that. Moving right into stocks. Stocks, or equities as we call them, we do not believe that over the next 10 years the yield is going to be all that great. Wherever the bottom is, it may be now, maybe it's going to test a new low, I'm not sure. But you can look at the situation, and at some point the market is going to bottom out. We're going to get into a trading range type market. We will have some good years, we're going to have some bad years, but it'll be kind of like the last 10 years where overall you're not going to make really very much money in the stock market. If we're lucky, the last 10 years we did a minus 1 or 2%. The next 10 years maybe we'll make a couple of percent. But having said that, there are going to be some opportunities. We're looking at a set of 25 or so stocks that have increasingly paid dividends over the last 25 years. And we're thinking about using their very low volatility stocks. We're thinking about using those in some way in our portfolio because they pay big dividends. Dividends are going to be the name of the game. If you've got dividends coming from it, you're going to increase the yield on your equity investments, and those could provide some nice returns with limited volatility, less than, say, the S&P. All right, what about specialty areas? Specialty areas for us are any one country, any one type of industry. So one of the big areas, emerging companies, emerging markets. We think that we're going to have emerging markets that will present some opportunities. The two sides of the coin are here in a whole lot of the emerging markets. They do not have any infrastructure, they do not have much going on, and they don't have a middle class that's coming of age. Those kind of countries are basically in a scenario where they're going to be boom and bust just like they always have been. So you're going to be real careful there. There are some other countries that have large new middle classes that are coming up, and those countries are going to do well. and they could continue to be dynamic. Who am I talking about? Brazil, India, China. Be careful about China right now because they have some stimulation that the government has done that may cause some problems. All right, what about commodities? Commodities are like gold, oil, those type of things. Once inflation starts to get a little bit of a hold, that could be 2 to 3 years out. I don't know when it's going to be. Right now we're in a deflationary period, so they have some rallies, but overall we don't think they're going to do all that well. So watch those very carefully. You're in a situation with all your commodities that they can be controlled by some other companies, or small groups of people can control them so they can move kind of independent of the basics. So be very careful in that area. Now, important stuff, all of it. I hope that you've gotten some good information out of what we've done. Unfortunately, it goes past the time when these videos go so fast that we can't get into a lot of detail. If you would like some information for you personally, if you're a client, we're already taking care of it. If you would like to sit down with us, just give me a call. Matter of fact, I'd like you to ask to help me. I'd like to ask you to help me. Would you feel comfortable introducing me to the people you care about, who could use our help? How about this? The next time you're in a conversation with a friend, family, or a neighbor, and the topic turns to money, would you introduce them to me? Would you just, take out your phone and look up my number, because I know you put it in, 321-752-5656. I'm at extension 12. Just pick up your phone, dial me, and introduce them, and let's have a conversation. So, that's what we want to do. I want you to help us out. And while you're thinking about what to do with your investments, I'm going to read a little poem that was part of a Bob Dylan song, and Mohammed El-Erian, the founder, the first guy to talk about the new normal, used this to close out his newsletter, and I'm going to use it to close out this one. May your hands always be busy. May your feet always be swift. May you have a strong foundation when the winds of change shift. Until next time, we'll see you later.